All right, do just a quick sort of little catch up on the charts, just so we can sort of see what levels we're kind of looking at through the session. Where are we at? 8:42 on the 14th of January. So just draw out a couple of quick levels here, so we can see that this on the 30-minute chart. We can see that obviously the sort of gold sort of hitting into a bit of resistance here. We've got one, two, three, four, five, six, about six sort of rejections through here. We've also got a little sort of advancement from the buyers, as you can see, on this little sort of direction coming through here. Now, typically this is, just get rid of that arrow on the side there. Beautiful. This is what's called obviously an ascending triangle. So if you're sort of looking at what's happening with the market here, just in this specific thing, if you ignore, the overall sort of thing, overall sort of like super bullish trend, all the geopolitical stuff, if we're just looking purely just at this little chart, and specifically this part of the day, we can see that obviously it opened up and it just ran up. Okay, that's fine. We had a bit of a sell down overnight. It's in more or less a larger kind of sort of range. But what we're looking at right here is basically the buyers are moving up their bid each time, and we can see this because of this little line that's ascending up over here, and this is why this is called an ascending triangle. Basically, you've got a flat line of where you've got the sellers, we've got an advancement of the buyers moving up here. So typically this is a kind of like a bit of a consolidation period, and consolidations favor continuation, but that's not always the way. So what we've got to work out here is basically, if it's to go up, what are we going to say? Well, a move up will come, obviously, once we're through this area here. Once we see price push up and there be a depletion of sellers in this area, that's when we'll go, okay, that's pretty much confirmation, and we can expect the next leg. But you're going to need to see a candle that's going to close somewhat like this. And you want to see that candle push out and close well above this area here, because as you can see, every time it's come into this level, the sellers have knocked it down, sellers have knocked it down, sellers have knocked it down. What this tells you, if you can get a close above the zone, is that there's a depletion of whoever's selling it at this level. It's never, I mean, look, nothing's ever 100%, but that's what you're kind of looking for, to sort of tip it in your favor that you may potentially see this thing sort of take on to the next level. Now, that's upside move. If we see a downside move, so say this candle right now sort of continues and comes down and closes something like this, then obviously we're sort of what we're seeing is like a change in pattern. The buyers have moved up, buyers have moved up, buyers have moved up, and obviously they met with sellers each time. But now the buyers have sort of get, you know what, I'm not going to continue advancing this move. And you'll see the price sort of come back down here. Now, because you take into account the whole thing's very bullish, yada yada, all this kind of stuff, it doesn't mean game over straight away. What we kind of would look for is the lowest level in which this little pattern started, which is obviously back down here around this 46.15 level, and this is going to serve as basically the same level, obviously as support instead of resistance, as to the downside. So there's a chance that you'll see a candle come down like this. Next one will come down, maybe a bit smaller, and then you could see price move back up from there. And the reason being with that is because obviously you can see that, there are buyers sitting here. There's buyers sitting here. So should they get another chance to buy it, overall it's moving up, they're most likely going to have another shot at buying it here as well. However, even if you get a little bit of a bounce that goes like this, once we see a candle move like this and close down underneath this zone here, that is going to be similar to this confirmation move of moving up over this side over here. This is going to be something that we can use as a directional trade that we're going to be coming back down over to this side here. So really sort of what we're kind of looking to do at the moment is to obviously see firstly a change in the pattern and behavior of what's happening. We know where the sellers are. They're in this zone here because every time it comes up to it, they sell down, they sell down, they sell down. We know what the buyers are doing. They're trying to advance here. We've got this ascending push to the top side here. Now, if you do move down to the bottom and get a break of this thing, it doesn't mean that, okay, it's definitely out. Safer trade is going to be from 46.10 or a close underneath this sort of 46.15, 46.10, this kind of zone over here. And then potentially we'd be looking to where we've seen buyers previously, which is this level down over here. And you'd expect something to the extent of like moving down like this, moving down like this, and then maybe we'd see a bit of a rejection and a move back up to this sort of effect. For the moment, while it's in this little congestion here, look, it's in a consolidate, pretty much in a consolidation. It is favoring a break to the top side. However, nothing's ever perfect with all these sort of things. If we do see this kind of breakdown underneath this line here, that's going to be your early indicator. Most likely, I mean, look, depending what you're trading in that's still a 10, 12 buck move coming down into that zone. But I wouldn't be surprised if you do get a reaction from this level, but it's the second effort that counts. And if the second effort sort of comes down underneath there, and we get a close down underneath this, as I said, this sort of 46.10, then realistically you're probably looking back down around 45.85 to see what happens with that there. And then we can work on what happens there. But the same sort of thing applies each time that you go to the level. So if you want to see a bigger move, you're going to need a bigger close down underneath these levels to then sort of say, hey, look, we could be moving down here, because the same sort of little price action that we're sort of describing here, of like, this is where the buyers are, this is where the sellers are. This is obviously just a small little segment. It's the second half of one day of action. If we sort of take a step back a little bit and we look at the bigger picture of this at the moment, well, you could see a big zone through here, which pretty much almost sort of lines up with where we had over here as well. But this is the zone that you really want to see broken. And the same applies with you want to close underneath, because what you're looking for when you get a close above these zones, once you identify the zones, is basically that we know that the buyers are here. Oops. We know the buyers are here. We know the buyers are here. We know the buyers are here, so on and so on. Anytime the market's had a chance to buy it at 45.80, plus minus a couple of bucks, they've bought it. So the idea is that if it does come back down here, most likely they're going to buy it again, or at least give it a shot. But should you get a little bounce and then second effort, and obviously a close underneath, to be able to do what all these candles, see all these candles have got wicks down the bottom, except for these ones, of course, but yeah, all these have got wicks down the bottom. It's like the market sort of pushing down into it, and then they buy it straight back up. So once we see a change in the pattern, so a close underneath this zone, that's when we're going to be saying, okay, we've got a bit of confirmation that we might be done with this level, and then you can start to look down at other previous levels of where the market might choose to sort of take it to. And you can obviously work on that at the time, but that is going to be quite a significant level to break through here. So the more times that it's sort of tapped and the longer that it's held, the more significant it's going to be once it does break. So I would say that anything underneath that sort of 45.80 is going to be quite a significant move. And I think once you get a close under there, I wouldn't be surprised if you get quite a big candle sort of coming down here underneath, should we get this close down underneath here. All right, so push on and just quickly, obviously, I'll go over Aussie as well. Aussie, very much super choppy at the moment. And what we can kind of almost sort of see with this is if you put like a bit of a band through the middle here, which is pretty much right on sort of 67 cents, we can see that sort of like, the price is really just oscillating around it. Comes down under, comes tests it, comes down, comes back up, tests it, gets through, moves up, comes back, moves up, comes back, moves down, comes up. You know what I mean? This is really just sort of like it's indecision here at the moment. You could sort of say it's okay, some sort of form of consolidation in which maybe you'd say, okay, well, came into it negative, and so maybe it'll sort of flow out to the bottom side there, but it's too erratic, I would say, at the moment, to sort of say definitively that it's kind of like, the market's definitely going to break to the downside here. What we can do is kind of fill it out a little bit, and let's just drag this down here, and we can just say, quite frankly, here's a big kind of level that we're looking at with the market here. Short term, we can say that this is kind of the level. So let me take a step back with that. So, idea with this oscillating price around this is if we do move up above 67, there's a good chance that we kind of dribble up towards this sort of 67.20. But then again, things can change. We just come back down here. So really, while we're sort of below 67.20 or we're above 66.70, it's really a bit of a tough call. I guess if you really wanted to sort of trade this area through here, you'd be sort of buying it when you're down here, you'd be selling it when you're up here, with the idea that this would sort of just sort of continue to sort of like oscillate back and forth. Obviously, it's not going to do it forever, but for the time being, that's the kind of play. So I would say sort of like at the moment, above sort of 67, pretty much 67.5, this kind of little bounce just up over here. I'd expect probably price to be moving back up towards that 67.20. It doesn't mean that necessarily it's going to break out, but wouldn't be surprised if price goes up over here. So you'd exit any sort of short positions, and if you want to get short, you short again from the top side here. This way, if it does break out, it's a lot better to be in drawdown if you're short from the top side than it is to be short from down here. It's an extra 20 points or so that you can use for sort of like a wider kind of sort of stop with it all. But I think realistically, for us to get full direction, we're basically just going to be breaking this wick down here or this wick up the top over here. So below 66, call 66.30, sorry, 66.60, or above, 67.30, adding a couple of points either side to it all. But realistically, I would say once one of these two wicks break, then I would say that's going to give us our direction, because you can see that obviously price has tried to hammer down out here, but again, it's just been bought straight back up. We had that data last night with the CPI, moved out, tried to get out of this area, and then pushed straight back down. So we know that ultimately this is where the sellers are sitting. This is where the buyers are sitting at their extremes. So once we see a close, even probably just outside these main levels here, but certainly once you see something sort of break and move down here, that's going to be your confirmation that we're moving down. Likewise, a close up here will be a confirmation that we're probably going up a little bit higher with the Aussie. It's really just a bit of a sort of luck of the draw here. Short term, obviously, we've got a level here at 66.86. Underneath there, you probably go back down to test these buys down over here. Up above 67.03, I would say that's where we're going to get a bit more direction towards the top side of the. Sorry, let's just pop this up. Towards the top side of the range. So they're your two kind of levels, I would say, for direction. Neither of which guarantee a breakout. Excuse me. But most likely you're going to see a reaction should you come down here, whether it's the buyers or the sellers, and most likely you're going to see a reaction from down up over the top here if we do end up to push up there, where you'll see some more selling sort of bring it back down towards this sort of middle target here.